Thank you for joining us at XM.com for today's market comment by Marios Hadjikyriacos. I'm Maria Pachurdis. Stock market staged a ferocious rally on Monday, with the S&P 500 nearly erasing all of last week's decline to approach its record highs once again. At the tip of the spear were Nvidia shares, which surged 6.4% to hit its highest levels ever after the chipmaker unveiled new AI-related products. The tech fever that gripped markets last year is still in play. Investors continue to pile into mega-cap tech shares, viewing those companies as safer due to their clean balance sheets and their exposure to the booming artificial intelligence industry, which might shield corporate profits from a global economic slowdown. Even so, there are some red flags. Equity valuations are expensive by historical standards, and that's under the assumption that earnings growth is going to accelerate significantly this year. Therefore, the soft landing narrative has been fully priced into share prices, which suggests that any further upside from here might be limited. Oil prices have been under the global microscope recently, mostly because of the instability in the Middle East. Despite the tensions in the region, energy prices have still drifted lower as investors have started to worry about a mismatch between abundant supply and insufficient demand this year. With U.S. oil production at record highs and having the capacity to rise much further as active oil rigs remain fairly low, there is a concern that other major producers like Saudi Arabia will attempt to defend their market share by pumping even more or offering deeper discounts. The risk of another price war could keep oil prices on the ropes for some time. Gold prices fell sharply on Monday without any clear catalyst behind the sell-off. The decline was strange because it happened even as the US dollar and real yields pulled back, which are normally bullish developments for bullion. Of course, we are still in the early stages of the year, so any sharp moves might reflect positioning adjustments from big investors. Crossing into the FX space, the mood has been relatively quiet. The major currency pairs have been trading in wide ranges, but with little direction, for the most part closing near their opening levels. The exceptions have been the British pound and the Japanese yen, which have performed relatively well this week. Bitcoin is back in vogue, with prices jumping to their highest levels in 20 months yesterday, ahead of the widely expected approval of a spot ETF by U.S. regulators this week. Thanks for watching today's market comment here at XM.com.